The BL26 Trust is showing an expected return at this stage of 25.2% over the term of the trust, which is expected to be up to 2 years. Again, this is a targeted equity growth number, so basically you can expect that at the end of the period of the trust, unit holders get back their capital first, their dollar unit first, and then the amount of profit that comes from the sale of the strata units in the development. And that's the 25%, 25.2% is that profit uplift we're expecting in this case. As I've said, there's opportunities for further growth in that as we go through our value engineering process, and also looking at the highest and best use we can get from the site based on the general proposition of what we're doing. And actually one other thing that I'm regularly asked is, like with CM23, how do you get 37.2% when you said it was going to be 25%? What are the factors at play there? So first of all, there's cost factors and revenue factors. And we like to think that in both cases we're quite conservative in our original numbers. So the cost of producing the product, the cost of the walls and the ceilings and the fit outs and what have you, we know that with some specificity before we start. Obviously we've got quotes and tenders from builders, and we make sure that we've added a sort of security margin on top of that for just general safety, I guess, general conservatism. And then of course we add another margin of say 5% of building costs on as a contingency, and that's all included. And we expect we've spent that once we get to the 25.2%. At the other end, we take advice from valuers and from selling agents, etc., about what we expect the stratas to sell for when they're produced. And we make sure that we take the conservative views on those as well. So we'll often have a 10% variance in the expected price of the sale price of the end units, and we err on the side of conservatism in that case. So really there's revenue potential upside and there's a cost potential upside. I'd be remiss for saying also that there's potential downsides too in terms of costs and sale prices, and that has to be remembered when investing in anything that isn't absolutely certain. But as I say, we take a reasonably conservative view so that there's a fair bit of fat built into our projections.